Greeting algo artisans. We're taking a look at CPI today. Caused the dollar to pump, Bitcoin to dump, and it is messing with markets. We're going to start in the data right now. Okay, so we're looking at Forex Factory right here, and Forex Factory is a site that I use to just keep track of when the economic data are coming out. For example, I knew that the 8:30 AM EST, which is 6:30 my time, that the CPI would be announced. CPI is a measure of inflation. They have month over month, they have year over year, a few different kinds of inflation being announced. In the end, this is probably one of the hottest ticket economic data announcements every single month, right? So there's this one, and there is the FOMC committee where they actually announce the interest rate. And then today we actually have further down here, you can see in the middle here, this red envelope here, the FOMC meeting minutes. I'm going to go ahead and put a link to this website in the description. There are people who have other resources for this. TradingView actually has its own resource for this, and you can put the data on your calendar. There are many ways to get this data, but under any circumstance, I generally don't trade, or I trade very carefully around these data. And of course, this is Forex related, so it's going to look at currencies. You see here, Canadian dollar, US dollar, the euro. It's all relevant to that. Now, some people like to trade the news. They like to trade when the news hits, see if they can catch the big crazy candle. That's not how I do things, although I would say that for the larger announcements like CPI and FOMC can yield some results, right? That's a very hard hitting type of announcement, and so price can go in a direction for a while. I just don't like to trade when I can't predict what's going to happen. We do have ways of doing it. If you come over to algofactor.tech, we can kind of show you, but again, it's not my general way of doing things. So let's jump over to the charts. Okay, so this is the DXY, the dollar index. Okay, so this is a measure of dollar in relation to other currencies like the euro and so on and so forth, right? To be precise, I believe it's the euro, the British pound, Japanese yen, perhaps a little bit mixed in there for like the New Zealand, Australian dollar, Canadian dollar, all the 8 majors more or less in different amounts. So you're looking at the dollar compared to those. I don't trade this, but it's a useful tool in kind of taking a look at what is happening, especially on the macro. Okay, so this big move up is a result of the news today, right? So we're looking at the 30-minute chart. I'm going to actually drop down to a lower time frame, and this is the 5-minute time frame. This is actually a each one of these candles is 5 minutes with price action. So you can see the announcement was massive. It took the dollar index from 104 all the way up to basically 105, real close to 105, and that's almost a whole percent within about 20 minutes. And it went up over 1% within a couple hours. Finally, it seems to be cooling off. Now we do have the FOMC minutes being announced today at 2 o'clock EST, which is in 30 minutes from the time of this recording. And that basically is going to be a look inside of what the Federal Open Market Committee was saying when they decided to hold the interest rates steady. And that kind of information is really, really analyzed, and it's how a lot of analysts will try to determine what they're going to do next, right? So the real question is Powell going to pump the market? Is he going to cut interest rates? And when is it going to happen? Well, we did have some clues on the Rogue News show yesterday, right? So V the Gorilla over at Rogue News did a raging ape in the afternoon at about 2:30 p.m.-ish EST. So go over to roguenews.com. I'll put a link in the description. And he talks about what happened. But basically, I think it was Goldman Sachs and maybe JP Morgan, they cut the rates on their savings accounts, which is something that most of these, and when I mean savings accounts, I'm talking about not your typical normal savings account. I'm talking about your accounts that have yield, right? They're usually maybe going to be around, treasury yields roughly. And so what they did was they cut those. And that usually does not happen until those large companies are pretty sure that we see a rate cut coming. So there's an indication that we could see a cut sooner than later. And we have been talking about this for months, right? V the Gorilla has been talking about this for months. And so if you just pay attention to our shows, or if you come on over to Algo Factory, you get to hear way ahead of time of what we think is going to happen. And that does help us make moves in the future. Okay, so let's see how this affected Bitcoin. Now, Bitcoin took a hit right as the announcement happened. Basically, and you can see that this large move happened, let me see, it went from 68.7 to 67.5 in the space of about 10 minutes. I mean, that's pretty remarkable. That's a strong move down for Bitcoin in a very short amount of time. Now, Bitcoin has recovered, which is showing the resilience of Bitcoin, and it's even continuing to rise up. But that little dump probably knocked some people out of their trades. Now, it might be that the market was waiting for this this announcement before a lot of sideline money came back in. That does happen a lot. And if we look back at the actual data that came out on Forex Factory, we can see the expected versus the announced. The expected amount of core CPI was at 0.3%, and the actual amount was the next tick up, just one tick up. Now, it's a significant number because of the way it's measured, but it's the least amount of move up from the expected amount. And what that means is that the closer an announcement is to the expectation, the less a market is going to move. And all these numbers are as close to expectation as possible while being on the upside. Now, hot inflation means that the chances of having an interest rate cut are lower. So when you have low inflation, that means that all the interest rate hikes we have seen have done what they're supposed to do. Inflation has been tempered, and that's that. Now, we have high inflation. That means that all of the hikes that were done in an attempt to stop inflation have not been doing their job, and therefore cutting inflation might be a problem. So a lot of people see this as, oh, they're not going to do cuts next month, or they're not going to do cuts soon, and so the dollar surges, and whenever the dollar surges, everything against the dollar goes down. Well, pretty much everything is traded against the dollar, so pretty much everything went down. Not everything, but pretty much everything. Bitcoin is a perfect example. However, if we zoom out on Bitcoin, we can see on a very high time frame that it's very bullish. The algos are bullish, all that data on the bottom of the screen, we beat the all-time highs, and price only pulled back to 69,000. If we zoom in a bit more, we can see on these very large monthly candles, over the past month, price has been above 60,000 and stayed above 60,000, right? Has not gone below, and it doesn't look like it will. We may have already seen the halving dump. We've talked about this many times on our shows, where the 17.5% move down that we saw back in March, mid-March, we think that might be it for the pull back in Bitcoin, and it appears that Bitcoin might be heading up from here. We'll see. We did have this pull down to this area. There was liquidity between, say, 66.8 and 68.8, so that kind of $1,000 range had liquidity, and price certainly went and grabbed it. There may be some more left. There's time before the halving. Halving's in 9 days, so we'll see what happens. But in the meantime, it does appear that Bitcoin wants to range in the high 60s and low 70s. And if Bitcoin does maintain ranging in that area, there is a pretty good chance that either just before or just after the halving, Bitcoin will surge up. And of course, my targets, as I've been very public about saying, are at 80,000 and 88,000. Those are my next two targets. If I were to go long on Bitcoin on a higher time frame trade, it would be those numbers. So this is just a brief look at what's going on with the markets and how the CPI affects things. And just to take a really brief look over at a Zero Hedge article, the problem with inflation and why a lot of people are not expecting the cuts, it says here, while the pace of consumer price gains is expected to ease, even the most optimistic economist forecast still sees headline annual inflation above 3%. Surging oil and other commodity prices are not helping. At the same time goes for supply disruptions. Let's go further. This helps to explain why 2-year break-even rates have climbed to about 30 basis points under February CPI. Okay, that's a lot of technical gobbledygook. So to make it really simple, what they're saying is all the rate hiking has not done its job. So there's two ways this can go. They're going to continue to keep rates high until it hits their target, or they're going to adjust their target. Now, we do have some pretty good theories as to what's going to happen. Via the Gorilla has been correct, I don't know, 100% of the time maybe. Nobody's always right, but he's been pretty close as to what's going to happen in the macro for many years. I always say he's at least 80% right, at least 80% of the time. Accuracy is around 80% or better, and the frequency is 8% or better. And if you want to know what we think, come on over to algofactor.tech. So come on over to algofactor.tech, where we teach people how to build their own trading method, and they can use that method to extract money out of the market with any frequency they choose. Some people want to do it daily, some people want to do it weekly, some people want to do it monthly. We'll help you reach towards that goal. And remember, trade your job, upgrade your life. We'll see you on the next one.